Welcome back. 25 minutes to go for the pre-open session to kick off. IndiGo reported a decent set of third quarter numbers. Remember, lots of disruption in early December because of the flights being cancelled because of the pilot issue. And so there's this one-off, etc. Let's listen into IndiGo CEO Peter Elbers first up, and then we'll bring in an analyst to talk about the numbers and the outlook.
I think it's important to highlight that the major operational disruptions for which we have been profusely apologetic took place on December 3 to 5. 3 to 5 December, we had a total of 2,500 flights cancelled, affecting some 3.5 lakh customers on those days. And actually, pretty swiftly thereafter, we have restored our operation and brought it back to stability and normalcy. And in due course of the month of December, we came back to roughly 3.8 lakh customers a day. And despite some of the weather disruptions we had in the second half of December, it has actually started off quite stable since we declared the operation back in stability around the middle of December. We continue that trend in the month of January. We have a very stable operation now, and obviously start to prepare for the month of February to continue that very stable trend. There's the currency movement pertaining to the dollar-based future obligations. We've had that explanation before, and with the development of the Indian rupee as compared to the US dollar, we have to take another 1,000 crores in this quarter on that side. And the exceptional items related to the operational disruptions, which are accumulating to 577 crore for the quarter itself.
Okay, Jinesh Joshi is with us. He's research analyst at PL Capital. Jinesh, good morning. Good to have you with us here. Thanks for joining in. So, I mean, IndiGo numbers, even otherwise, and this quarter, of course, was exceptional because of everything which has happened. But I mean, the reported net number fluctuates wildly. Has fluctuated wildly. What did you make of the quarter and where we are in the fourth quarter already? I mean, prospects going forward.
Sure. So see, I think this quarter was marred by one-off. There was 1,100 crores of FX hit that the company had to take because of depreciating rupee. And there was a 1,500 crore one-off also in this quarter. But if you adjust for this one-offs, I think the PAT of 3,100 crores that the company reported was way higher than our estimate as well as street estimates. Now, given the fact that there were disruptions in the month of December, I think the numbers that they have reported in this quarter, I think they are quite good, so to say. But as far as the near-term guidance is concerned, I think for 4Q, that 10% ASKM guidance obviously takes into account the capacity constraints that are going to come in because of the new FDTL norms. So it remains to be seen as to how the capacity expansion shapes up, especially in 27 and 28, given new norms will come into place. So yeah, that is something which will be keenly eyed. We are at about 10% ASKM CAGR for the next couple of years.
Jinesh, if I remember correctly, you had downgraded Interglobe Aviation in the month of December to a hold?
Right.
Okay. But first, just tell us, in Q4, how is the performance likely to be? Because I remember Kumbh was last year through January and February, and there was a massive spike in travel demand, so numbers would be boosted. So Q4 numbers would be impacted by a high base effect. So how is it likely to perform in Q4 near term? And you spoke about how these FDTL norms will impact, it's a structural headwind. It will impact maybe FY27 and onwards. So what are your numbers? And at what point would you look at reinstating your buy on Interglobe Aviation, considering its dominance, expansion internationally, etc.?
Sure. So if I talk about 4Q, I think the 10% ASKM guidance that they're giving, we are more or less on track. And again, what will happen in 4Q is that you will see a mid to single digit kind of a moderation in PRASK come through, because the base of 4Q FY25 was very high, given the fact that you had Kumbh Mela at that point in time. But nonetheless, overall, I think a 10% ASKM guidance in a constrained environment is definitely good, if not very good. So taking that into consideration, I think the numbers in 4Q will be decent, at least on the EBITDA side. But as I highlighted, that the long-term challenges with respect to capacity constraints do prevail, and at this point in time, it is slightly difficult to preempt as to where that growth number could eventually settle. But we are building in a 10% ASKM CAGR for the next couple of years, which effectively results in a kind of a flattish PAT growth number for the next, say, maybe 2 to 3 years. Yeah.
Got it. All right. Hi, Jinesh. Good morning. Good to see you. And I think in terms of deliveries, if I got that number correct, I think they're expecting, one per week for the next 5 years, if I remember correctly. That said, as Yuma mentioned, you have a hold on the stock. What will make you turn positive from here on? Will it be earnings? Is there a couple of tailwinds in store? Or is it a valuation argument? Go ahead.
Yeah. So I think tailwinds in earnings is one thing which I would essentially look at. I think one factor which perhaps we have not discussed is the inflation in the cost structure that is seeping in, given the fact that there is significant rupee depreciation. I'm not talking about MTM gains or losses that we adjust separately, but a depreciating rupee hits you on the P&L side as well, because most of your costs are dollar denominated. So I think that is one area where we are finding some bit of a concern coming. And I think when we turn positive is that if we get some comfort on ASKM side, that 10% number is something which we are building in. But if we get more clarity on that side, is something where the EBITDA jump can essentially come through. And again, on the pricing side, that 4Q guidance of mid to single digit moderation in PRASK is something which I found to be slightly negative. And if we get more comfort on pricing, which is slightly difficult to preempt, I think these are the 2-3 things that we will eventually look out for. Capacity is one which they can obviously navigate by damp leases, so that may not turn out to be that big of a problem, but then ultimately that will have an impact on margins. So it's a trade-off between capacity and margins is what I feel. And I think while from here on, a 5 to 7% correction or maybe a 10% correction, just in case if that happens, that could be a very good entry point is what I feel.
Jinesh, when this entire December issue happened, many were of the view that for players, marginal players like SpiceJet, I mean, if this was a moment to shine, this was it. And they had to seize it. Your assessment briefly, anything happening there? Or will happen? Can happen?
I don't cover. What I can tell you is that a 10% effective cut in the winter capacity means that those slots will effectively go to other airlines, which obviously means that okay, they have some market share to capture. But given the size of IndiGo, I mean the 65% market share that they have, and effectively that one plane per week that they are effectively going to get in terms of organic induction, that puts them in a very good space as far as the capacity addition is concerned, despite the challenges that we are seeing due to FDTL norms. So difficult to comment on the peer side because I don't cover SpiceJet, but overall, yes, a 10% winter schedule cut effectively means that that capacity will go to the other players in the industry.
Okay, Jinesh, thank you very much. Good speaking with you. Appreciate your time here on CNBC. Siddharth came